I'll just take a minute to share it on my page and then we. All right, let's start. Assalamualaikum everyone. Welcome to our fourth and final training session, which would talk about how to write an equity research report. I hope you guys have covered a significant bit of work as far as your research and analysis on Mizan Bank is concerned, and you should have by now started writing the research report because you are due to submit it to your mentors within the month of December. Before we start, as usual, and by the way, we would shortly be coming up. In fact, we have already started the posts for the participating team on teams or introduction to the participating teams along with the mentors and faculty advisors on our social media pages. So keep following it. You may share it on your timeline to create a buzz. Um, Before we start, as usual, we'll just recap the housekeeping rules, which you guys must be familiar with by now. The session is going to be scheduled for an hour, including the Q&A. All participants are requested to keep their videos turned off for this session and turn it back on at the end for a group photograph. The participants are requested to stay muted. Q&A will be at the end of the session. You're requested to submit the questions via chat box and I'll respond to them as they come. The session is being recorded. The recording will be emailed to all participants. It's also going live on our social media pages. Um, this session on equity research report writing, I'll just quickly give you an overview of what we will discuss in this session. First and foremost, while you're writing an equity research report, you need to make sure that you don't bury the lead. Conclusions always come first in case of an equity research report. It's financial writing or equity research report writing is more akin to journalism rather than scientific writing. Um, the conclusions come first, the details always in the last. Financial analysis reports need to have 6 sections. There is a recommendation and summary, which is followed by investment thesis and earning forecast, valuation, elaboration, and detail. You can um, um, move around investment thesis, earnings forecast, and valuation, but recommendation always come first, and elaboration and detail is always in the end. You again, you may I don't exactly recall uh, the sections that we had in the format that we discussed in our first session as far as the equity research report um, writing is concerned. The format uh, under which you are required to submit the research report for this competition, but it more or less follows the same outline. Again, as discussed previously, you're free to add section, but broad-based outline should remain the same. Even um, so, as So recommendation comes first, detail in the end, and you're flexible to move around things here and there and add a few if required. Financial writing is persuasion, it's not description. You are encouraging or persuading your audience to invest in a stock or not invest in a stock. So it has to be persuasive. Uh, while writing the report, especially when adding details and descriptions, you need to ask yourself whether the material meaningfully contribute to the argument or not. And if it doesn't, you need to take it out. Uh, Coming to you need to uh, have the elements of writing style in your memory. Analytical writing should be in active voice. It should contain mostly positive, concrete statements, avoid using negative words. And most importantly, it should be very brief and succinct. Uh, Avoid logical traps. Logical traps can sink an otherwise strong investment argument. This happens when you're using chained logic, where you have um, um, multiple layers of arguments that build upon each other. So if one rung of the ladder breaks or one link of the chain breaks, or the audience doesn't agree with that link, the entire argument would fall apart. So you should avoid that, using that in your equity research report. So uh, we exactly what we did exactly, just a few in the last 2 minutes or so. We did the first, the recommendation or summary, the brief conclusions, or the bottom line of this session, and now we are going to move to the detail. And this is exactly the writing style that you need to follow in your equity research report. Now we'll move to the details. We'll first talk about the recommendation and summary part. So it's useful to say, or a useful analogy to consider financial writing or financial report as being written front to back. So the recommendations always come first, but that doesn't mean that you just start with a recommendation and build an argument around that. You have to complete your background work. You have to complete your analytical work. So you will have a lot of data, a lot of charts, some notes that you would have taken. And once you think that you understand the company well enough and you have numbers, your earnings forecast ready, and your valuation and target price is ready, you have the current price in front of you, you have your buy, sell, or hold recommendation. You should write your recommendation and summary page first, and then compose the rest of the report. Uh, you should avoid using data dump. Um, you should do the thinking first and then do the writing. If you have made notes, which you would naturally have made because you'd be going through a lot of secondary research, then keep them as a separate silo. And as and when you need stuff, you need to include stuff in your report, you can take it from there, but make sure it follows a flow. uh, so recommendation and summary page comes first. You write it before writing the rest of the report. Page one of the analyst's equity research reports is his or her best chance for pulling in the reader and capturing his or her attention. Most brokerage reports basically lead with their um, best stuff on their front pages or the first page. Let's look at an example of a recommendation and summary. I'll pause for a minute to allow you to read it. So let's just quickly review this recommendation. It starts by um, very directly stating that Dell Computer is the industry's premier growth company and will likely to remain the personal computer industry's premier growth company. So this is a punchy topic sentence to start with. Obviously, an analyst would have arrived at this conclusion after a very detailed and a very thorough analysis. Then it talks about the hardening industry competitive conditions. The details would have a lot on the competitive analysis of the personal computer industry, but the report goes on to say right in the second line that this company would weather the hardening industry competitive conditions, and those industry competitive conditions are also detailed in terms of elaborated in terms of unit pricing pressure and slowing industry growth. Then it talks about some risks that may face the industry, which is the PC markets turning unexpectedly sour. And then it talks about, but it also, and then it goes on to state that Dell may be tested by it, but the company's skill management, powerful business model, superior product offerings, and financial strength would maintain its strong competitive position. So even if the industry turns bad, uh, the four main attributes of the company, that is skilled company, the company's skilled management, powerful business model, superior product offering, and financial strength would help it to perform better than peers. Then the analyst mentions its target price and its buy rating and his buy rating. Um, just to clarify, this report talks about is probably being written in the year 2000 and talks about the 90s in terms of historical analysis, and the years between 2000 and 2003 as the forecast period. Um, and we'll have more example of this um, of more examples focused on Dell um, in later in the presentations as well. So uh, I would like to mention here that there are four main pitching points or pillars of the investment recommendation that has been mentioned or listed in this recommendation in summary. And these are companies: skilled management, powerful business model, superior product offerings, and financial strength. As we will move on into details, the analysts would be required to explain these pillars in detail. Now we move on to investment thesis. So investment thesis is basically the pillar upon which uh, the argument uh, or the recommendation rests. It's the report's first layer of detail. Usually, the investment thesis is also present on the first page along with the recommendation paragraph, and it's usually in the form of bullets. If the summary and recommendation answers the 30 question, the 30-second question about the stock as a whole, the investment thesis devotes another 30 seconds or maybe more to elaborate upon the recommendations, principal arguments or principal pillars, as I just mentioned, in case of the example of Dell, in which we had four. Investment thesis is often supplemented by a short company description and risk factors. Again, we move on to the example of Dell. So the recommendation paragraph mentioned four main arguments or pillars. One was skilled management, second, strong business model, superior product line, and financial strength. In the investment thesis, you would briefly, especially when it's on the summary page, you would briefly elaborate these four pillars, and I'll just pause for a minute to allow you to read through it. So as you would have noticed, the investment thesis elaborates upon, or in fact, give compelling arguments for each of the four pillars of the recommendation that were mentioned in the recommendation para. It basically details as to why the analyst believes that Dell's management is a skilled management, why the business model is strong, and what benefit does it bring. What does the analyst mean by a superior product line, which is the line is diversified and it guards against selective market downturns, and also and then lastly, financial strength. So what or where the financial strength comes from, which is strong cash flow and balance sheet, uh, and what advantages does it bring to Dell vis-a-vis its weaker competitors. Um, Investment thesis is, along with the four pillars, investment thesis also include risks. And as mentioned earlier, um, generally it's also useful to have a brief company description on the first page, right on the first page of your report. So risk in this case, again, I'll pause for a minute or so to allow you to go through it. So the two risks are mentioned. One is maturing PC market. The second is vulnerability to general downturn. Uh, Often, if you have a buy recommendation, then the company is likely to be good, and uh, if and especially if the company is good, the management is good, they would have taken some mitigating steps to overcome the risks that you are talking about, because the industry should be equally aware of those risks, if not more. So it's always useful to mention those mitigants, as it is mentioned here that that for instance, Dell must continue to shift its product mix to a higher margin laptop and server market in order to position it in the face of rising competitive pressures and continuing pricing pressure. Uh, in case of vulnerability to general downturn, sort of a mitigant is that the company will continue to build its global sales effort, uh, which would hedge it against a general economic slowdown in the United States. Then comes, after the investment thesis, comes earnings outlook. Earnings outlook presents a summary of the income statement forecast, um, but it's not a line by line analysis of the income statement that the revenue will grow like this and the cost will grow like this. It basically firstly discusses the principal economic drivers, and then talks about uh, the most important of analyst base case assumptions, such as, the most important numbers are revenue growth, margins, capital investment requirements, etc., etc. If it's a heavily leveraged company, you may talk about the rising or falling finance cost, depending on whether debt is rising in your forecast period or falling in your forecast period. If the interest rates are rising, then again, the finance cost becomes critical, because it may significantly increase, and if the interest rates are falling, it would decrease. So that will also become an important discussion point in the earnings outlook section. Uh, let's look at the example of Dell's again. So again, I'll pause for a minute to allow you to read through it. So you would notice here is that there is a lot more focus on the context rather than um, the analysis of numbers and discussion of growth rates. So uh, the first bullet is saying that Dell's earnings per share grew at an 82% average annual rate between 96 to 99, but sales growth will moderate going forward, and the margins are declining. So the annual rise in earnings will slow down to 43% in 2000. EPS would be 0.76 compared to 66% growth at 0.53 with an EPS of 0.53 in 1999. And then the analyst is also so in that context of falling sales growth and declining margins. So these are two main ingredient or main um, assumptions in case of Dell that would affect its investment case. So the analyst has given the context of revenues and margins, and then based on that context, it is also the analyst is also giving a forecast of how the annual earnings growth is expected to fare during the next 3 years, which the analyst expects the earnings growth rate to fall to 22% in 2003. In the second bullet, um, um, the uh, the analyst is talking about um, the basically the bottom line is that the unit sales or the volumetric growth is going to remain strong, but revenue per system or per unit price is going to fall because of competitive pressures. And it's also and uh, so that then the analyst is going on to basically support his thesis about the falling revenue per unit since 1995, so falling revenue per unit by recapping the performance since 1995. And if and in the subsequent sections, the analyst has presented a table that is illustrating that decline in um, revenue per unit. Next comes valuation. The objective of the valuation section is to present the analyst's target price argument. Uh, this argument may include the selection or the rationale or logic behind selection of the chosen valuation model. It also includes a brief working of the target price estimation. It's useful to have that working presented through a table along with some brief discussion. Um, After the valuation stage comes elaboration. Uh, Elaboration section typically contains the comparative and strategic analysis, um, but it's very important to make sure that the elaborative material that you choose to include in the report must support the principal investment thesis and must be related to it. Now, again, this doesn't mean that you only pick and choose things that support your argument. You should have done a detailed analysis before starting to write a report, and you should make sure that you don't include unnecessary stuff in your details. So what an analyst need to make sure, or a litmus test uh, uh, of whether you have um, only included the relevant stuff in your report is that the reader shouldn't have to ask, why am I reading this? This is the most distracting thing for a reader when he is reading a report. Generally, the audience of a sell side equity research report is a fund manager. A fund manager gets reports published by dozens of analysts, and it doesn't, he or she doesn't really have time or a lot of time to spend on the report. So if there is a distraction, or the fund manager tends to find something that is irrelevant, it would most likely skip the report and not read reports produced by that particular analyst in the future. Uh, so the elaborative material that you add should be a recognizable continuation of the principal investment thesis that you have mentioned in your report. The elaboration section can be structured anyway. The analyst has a lot of independence in this regard, but whatever structuring is there should be relevant to the company or the industry that you're writing a report on. It could be around products, it could be around markets, geographies, customers, technology, or any other topic. Last come detail. Detail is uh, basically the full force of the report in the outline of uh, the CFA research challenge that we discussed in the first section. Detail primarily goes into the annexures. Here you can discuss the financial model in detail. You can have a detailed discussion on the industry that the company operates in. In some cases, it may be useful to discuss or give a historical perspective on the industry that you're writing, that the company or your subject company operates in. There are industries which are not well understood. In case of that, and it may have very technical aspects or a sophisticated technology in use. So it may be useful to have those technical details in those in the annexures. Um, but again, the details that you choose to include should be linked to the contents of the main report. It shouldn't be anything unrelated. Uh, so it generally doesn't work like the way typically the university assignments work, where the length of the report matters. The amount of details matter in an equity research report, but it should be relevant. Uh, if you have a brief and succinct report of 10 pages, that may be much better than a detailed report of 100 pages where 30, 40, or 50 pages are not really relevant to the report. So a few, this slide sort of gives a recap and also identifies or lists down key things to keep in mind while writing a research report. The burden of proof and clarity lies with the analyst. It's an analyst's responsibility to make the report reader friendly and clearly communicate the investment argument. It's not the reader's responsibility to go back and forth and trying to make a meaning out of the content that you have presented. Don't bury the read. As discussed previously, readers generally approach financial reports like a newspaper. They would read the heading, they would skim through the report like a stone across water. They would stop occasionally to focus. So it's useful to have charts in the middle that catch the reader's attention. So all the it's an interesting, it's a useful strategy to have charts and tables supporting each of your main arguments. Be ruthless about details. If you can't answer the question that why is this material here, you should most uh, you should ideally skip that. You need to make sense of charts and tables. Again, while you're including charts and tables, so charts and tables are visual aid. They should aid in a reader's understanding rather than make the reader even more confused. You should also structure or format the chart or tables in a way that is reader friendly. Just let me go back to the example that just popped up. So here, um, I I would say there are a lot of ways to improve this table. So uh, let's say you have dollar sign in front of numbers, or you have units in front of numbers in the first and last column, or don't have it in the middle columns. This is I would say this is a distraction. the way I would go about it would be to have a separate column before the first column, that is 1999, and have the units in there. So uh, dollar USD billion should be here, or percentage should be in the second row, and then you may not have the units in the rest of the columns, or you just include the units in brackets next to the labels and not have it in the other column. So consistency and free flow is important, but there is no set way to do it. Uh, the analysts are flexible in deciding which way they think uh, suits the report, or whichever way they think is the most reader friendly, they are free to use that. So, lastly, style and its abuse. Avoid passive voice. Rather than saying it is thought, you should say I think. Rather than saying it is projected that, you should say I project or we project. Rather than saying sales are projected to grow at 5%, you should say projected sales grow at 5%. You should be positive. Avoid expecting the word not. Rather than saying management was not expecting the order to be cancelled, you should say management was surprised by the order's cancellation. The company has not produced sales growth. Rather than saying that, you should say the company has failed to increase sales. You do not expect the company to meet its growth target. Rather than this, you should say the company's projected growth falls short of the target. Being concrete. So rather than saying a period of slow earnings growth set in, you should say earnings growth slowed to 5% for 2 years, or whatever the number be. You should be brief. So rather than saying the reason that expense growth accelerated, one should use expense growth accelerated because. Similarly, the fact that management has not succeeded in its effort, this can be replaced with management's failure to blah blah blah. The company's sales are expected to grow going forward. Rather than saying this, you can say the company's expected sales grow at such and such percentage. So these are the common. So what you see on the left column in this slide, in the previous slide, it is the common writing style that we tend to use while we are uh, writing an essay, or maybe making a report for any university project or a term report. But these kind of sentences are really not uh, considered good quality when it comes to financial writing. You really get rewarded, or um, you really get rewarded for expressing your argument clearly and as fewer the words as possible. Um, so this is it from our end. You are free to ask questions. Um, you can send your questions in the chat, through the chat, and I'll answer them as they come. No questions so far? So since we don't have any questions, um, I would request you to just please open your camera, switch on your camera so that we can take a good photograph. Umar, are you there? What about the rest of you guys? No one wants to open their camera? Umar, आप please group photograph ले लें. And when you're done, then just let me know and I'll bring the session to an end. Okay, so thank you so much. Wish you guys best of luck with your reports. And have a good day. Take care. Bye bye.